All right. Hello, hello, hello. All right. So jumping on a little bit of an earlier stream today. I got notified yesterday that there is a stakeholders meeting for um, County Lacrosse. So I'm the president of that association. So they're like, yeah, 10 o'clock. Did you see the notice? I'm like, who plans something at 10 o'clock in the middle of the week for a volunteer position? But anyway, so I need to jump out right at 10 o'clock today and jump over to that. So I do apologize for having to go on a bit earlier today, but you know, too important of a day to miss it completely. So we just got some data in just a little while ago. We had our non-farm employment change. We talked about this, and again, it's interesting. A little bit of downward revision last time, 20K, and then a kind of a big hit. So, we talked about JOLTS data expanding, and we said, hey, listen, a lot more. With that expanding, wouldn't be surprised if this is higher as well, and it is. It's actually higher also. So, kind of just rolls right back into the whole. The jobs market and the destruction is not there yet. So that's going to be a big one. As you can see, actually, let me put in, actually everything is in. You can see not a whole lot from now till 2 p.m. And again, all news and everything is literally on FOMC statement today. We're raising the Instagram quote gurus are like, I can tell you exactly what's going to happen today. I was like, really? And a couple of them have posted things like, this is what we had earlier this year. And then like last time it was different. They're like, see? I'm like, yeah, well, I love when people tell you this is what exactly is going to happen. It's like, dude, you have no idea what exactly is going to happen. You can say something with a high probability, but you don't know exactly what's going to happen. There's no way to say that unless you're the guy that is saying it. But it's, laughable at best. But anyway, again, I don't think anybody doubts that the 0.75 is in. So remember, that is baked in already. If anything, right now, the way that it's looking in the data, I mean, I don't think they're going to slow down, but I think the market is waiting for any individual, like any little piece that they could say that is considered weak. I think they're going to take advantage of it. Right now, where they're kind of stacked in, again, are we going to get the same whipsaw, the 2 o'clock drop and then pop at 2:30 when, Powell speaks? Again, it's an hour, 2 parts. The first part is prepared. Like I said, I think, yeah, and look, you're already seeing it. Will it open a downshift? Why these rates are self-harming process? So many people are talking about it, but all the data right now is justifying, besides, some like the housing data. I mean, nothing is justifying slowing down yet. So yeah, kind of a hard one, right? We're still seeing inflation go to rate, places where it shouldn't go to. So, and again, with private sector hiring more than expected, the job market is not slowing down, and that's being considered the major problem. So, I feel like there will definitely be a whipsaw today, but this is something to watch out for. If you're looking at price, though, we did not get the massive dollar weakness moves that dollar preparation moves that we were looking for. So, again, I'll show it to you in a second, but I think it's a lot of things are in good places right now. Tomorrow morning early, we obviously have a CPI data for the Swiss, and again, CAB. Nothing we can do with it right now. We'll see what the dollar does, and then there may be a potential reversal in the dollar Swiss. And then tomorrow morning we have, again, early before we get on, we have the UK coming in. Now, this would technically be a positive. You're like, wow, that's a big change. Market's already factored it in. I actually think it's going to be more negative. I really feel like it will be 0.75, but if it comes in as a 0.5, like if they maybe overshot it a little bit, or they say that this is it, we're going to hold now, we're going to, wait, we've raised it so many times. I do feel that this is actually going to be more of a negative type trade. We've seen that recently where it's been a, interest rate rise, but it became a bearish trade because, again, it was already factored in. All the retail traders after the fact were like, oh, that's great. And again, didn't work out how they wanted to. So we have all that, and then we have obviously tomorrow morning, right after that, we have the unemployment claims number coming in. After all the BOE data and FOMC, there's a lot there. And then services followed right behind. So again, next 24 hours, got a lot in there. Hold on, let me see this one real quick. Send a statement. China reiterates adherence to zero COVID policy. We'll stick with the zero COVID policy and strive to control epidemics past the short scope, short term, and lowest costs. Not bad. It dropped less than that one. Yeah, see, rip China economy. This is a way of saying USA F you. Yeah, pretty much. Yeah. So I think China at this point has already proven that they will not hurt their own, but they're not worried about hurting other people's. All right. This is an interesting one too. We got this about 3 hours ago. That Russian military leaders discussed use of nuclear weapons in the Ukraine. It's interesting. You would think that the talk of nuclear weapons, like using nuclear weapons, would be higher than a yellow, right? But it is not. It is only a yellow at this point. It's amazing. It used to be like, oh my God, a 10 crossed the border. Everything was a red. Now that, military leaders talking about nuclear weapons in the Ukraine, it's a yellow. So it just goes to show you what's important, right? In society these days. It's totally messed up, right? It's totally messed up. But yeah, so I mean, this really goes to show you all eyes are literally on FOMC today. So extremely important. So with that said, let's jump in and let's go right into some of the charts and kind of look to see where we're at. Obviously, again, we talked about it yesterday. VIX, raising. Again, there's the unknown about it, and how bad is it going to be? What does it look like next? That's normal. That's nothing. This is exactly what you would have expected. So I don't think again, this is no surprise or anything with this. Now, how high it goes is kind of the big question. We're kind of sitting in the middle of the range. I don't think we'll have any problems getting up to the 27. Again, this is not a supply and demand based thing. It's actually the volatility and like kind of the fear index on the ES, or really on like SPY options. But rising how it should. Now, the indices obviously are in the red, and again, they are kind of preparing for it. But right now, what's interesting about this one is we're seeing the dollar pull back again. So yesterday's data, great. I mean, literally it pulled up. It was a parabolic move. You're seeing a parabolic retracement coming in with the dollar. And again, it is past the 23. It kind of chopped through that and got really, really ugly here in the European session. And it's still continuing to get lower. With it driving down, this is kind of preparing. And yes, it is a parabolic move. But whenever you see this type of pullback, particularly in the European session, which started right here, driving the price down, that's typically setting it up for kind of the opposite reaction. This is kind of setting it up right now for a dollar strength-based move today, as it should. I mean, again, a 0.75 is a big deal. Even though it's already factored in, people know that it is. There will be central bank money that's like, hey, we can get a 4% return on our money by leaving it there. Sounds great. Let's do it, right? Particularly in something like the euro pound currency pair. I mean, why not borrow the yen where you're not paying an interest rate for it, right? Stick it over in dollars and just let it sit there in cash and you make a 4% return. It's not too shabby. I mean, obviously inflation is high and you're like, 4% is nothing. We're up 10% over the year. It's like, I don't know. You think we're going up 10% in the next year, or will it start going back down? And again, the goal is that inflation will go down. But if you're making higher interest rates because your money's sitting in cash, that's how you guarantee yourself a return. So there will be big money central banks, things like that, large corporations, artificially putting that money over there either way, even though it's factored in. So, and that's kind of more of like on a big kind of like macroeconomic based level. With it pulling back, I mean, the question is, how far can we roll? How far can we push it down? Will it continue to maintain weak in preparation for this data today? And will it give us a buying opportunity? I mean, right now it is driving back. We do know we have buying coming in right here around the 111 area or 110.80-ish area. And again, we do have the lows and there's not a lot there, but we know 111 will be obviously a big one to hit. So kind of a lot there. A lot going on with the dollar. Commodities. Yesterday we talked about natural gas being 7% down was kind of out of the ordinary, right? And we talked about throwing something like Bollinger Bands to see kind of what that looks like. We were way outside yesterday, down 7%. Well, guess what? We're up 6.4% today. So again, that's how those things work. When you have a big move in one direction, you typically have a reversal and a big movement back in the other direction. So, nice seeing that there. Now, let's go to the currencies. Now, currencies. Obviously, yesterday, strong dollar move when we talked about being able to break through this 63, 67 level. We didn't. We ended up hitting off of it at about 12 o'clock yesterday. We had a little bit of a retracement at 10:30, and then we came back down and grabbed it, and then that was it. This was the bottom. It's like, yep, no, not moving anymore. And then we hit that late in the night, and then really, European session, it opened here, pulled down. Actually, 3 o'clock is right here. We pulled up at 5:30. We pulled back down again, and we kind of pushed sideways again. So looking at this, the Aussie dollar is like, what do we do? Are we going up? Are we going down? Right now, I mean, with this kind of rallying higher, it looks like the same exact picture. It's not really dollar strength because that's what we saw yesterday morning. And again, that was a monstrous number. And then when we started to retrace back up again, it's kind of like, listen, is this getting ready and cocking the trigger for the next big move? right now on a purely kind of fundamental basis, yeah, that's kind of what it looks like. It really looks like we're seeing this dollar weakness in preparation for a strong dollar move. So question is, can we get into it beforehand, or does this rally up and really surprise a lot of people? So, right now with the Aussie, we're not sitting in a zone. There's nothing sitting in here. Obviously, we had some confirmation and testing. So, I mean, there's still a chance that if the U.S. session really kind of gets started and roll and we push down, we could still see that dollar trade come in, right? That dollar weakness trade come in. But right now where we're at, it's kind of like, I don't want it to go either here and find these sellers or come back down here and find these buyers. And we're kind of skirting in the middle. Right now, it's about 30 pips down or about 35 pips up. Both of those are obviously well within kind of the ranges of what we can cover for now for the next 2 hours. So that's not necessarily a big concern. But right now, it's like, can we trade something right now for the open? Not really, right? Not really. Overall, when you look at this, it's like, if anything, I would say maybe it's a bit more of a push down. But then again, that goes right back. If we see the dollar strength kicking in before the news, that's going back into the same narrative that we're going to have dollar weakness based off that trade, and this is going to be a skyrocket up. So, yeah, that's what we're looking for Aussie dollar. Aussie yen. So, Aussie yen, we talked about a Harry Potter. Unfortunately, this big spike down and then the big spike right back up again never gave us the basing level that we're looking for a Harry Potter trade. And because it pushed it all the way down, it kind of is like, got to kind of pull the Harry Potter trade off. It just didn't meet the qualifications, right? We were looking for a drop, a base, and then a pullback. Unfortunately, it dropped and it pulled right back into the same zone. So it did not give us the entry that we need. And as such, because of that, and it drove all the way down, you got to kind of remove it. We don't have a new area to put a base. So unfortunately, that's one of those ones that comes off the radar. There is still a bounce area that we see lower. Now, this one is also trending lower. And again, this is also going to have some yen play. Right now, it's down a little bit, but it is still kind of sandwiched in as well. Now, interesting thing about this one, if we do take the high, which again was this 95.45 yesterday morning, and run it, you can see the 23 provided absolutely no resistance, but we did get a little bit of front running up here around here. Okay, so the reason why I want to point this one out is because it is kind of very similar to what we see in the Aussie dollar. If it does rise up a little bit more, there is an area to get short. Okay. Now, this one would be a short up here around 94.78. It would only require about 30 pips. Can we move 30 pips in the next 6 hours, 7 hours? Yeah. Absolutely. I mean, it's got a 4-hour ATR of 46 pips. So, I mean, we know that it obviously can run that distance. So we got plenty of time to get up there. And again, that's kind of, this is the Aussie yen is kind of a weird one today because it's a proxy and a proxy, right? Obviously, nothing's happening with Australia. Nothing is really happening with the yen. But we have one that's a proxy for gold and one for the Dow. So kind of like a double proxy based trade. I think for this one, really, I'm more looking for kind of the Aussie short. Again, gold weakness in there. I do think we get gold weakness. Not that we get massive yen strength out of it today, but I just feel like, if anything, I'm leaning more towards the side that I'd like to get short this one, particularly if we're up here. Now, the Aussie yen may be a way to play this one if you do know how to play it in options, right? And again, you can use something like a Nadex. The problem with today is that spreads are going to be wider, but again, obviously, euro dollar, pound dollar, dollar yen, they're going to have monster spreads. Being a proxy, this may be a little bit of a way to play this a little bit cheaper because people aren't going to necessarily be looking at it. But if you think about it, today's 0.75 is designed to do one thing: crush inflation. Crushing inflation is meant to crush gold. Gold gets crushed. That also is considered the commodity that is kind of a proxy for Aussie, which would send Aussie down. So again, if we can get a pullback, I think there's a short trade set up in this one. Right now, as far as going long, again, we're kind of sitting in the middle as well. I guess if we're sitting down here at the 93.68, the same can be true that maybe, it's going to be such weak data, the dollar is going to, or the gold will go up as the dollar goes down. That would also provide some strength into the Aussie. So, it's well within range. It only needs to move about 46 pips. We know they can do that in 46 hours. That is a 61.8 retracement and a decent bottom. Any other time I'd really like this one. Just again, can it blow through that? Yeah, it's FOMC. It's a monstrous raise today. This is a 30-minute zone. Any other time, I'd be all over this one. So again, it's one of those ones you want to kind of use a little bit extra risk. Now, here's what we got going on with the euro dollar. Euro dollar obviously below parity, floating around that 99. You can see yesterday we had this big drop. We talked about having a target down here. If you were short, and again, the short was at 9 o'clock. It was right before we got in, kind of left before the news. And again, This is 100% fundamentally justified, the move yesterday, because it was a very strong dollar move. We talked about grabbing your money out and taking profit at 98.82. You can see we kind of came down there and then kind of base back and forth before popping all the way up, kind of stopping people out, and then dropping back down and putting a new base in. Now, it did hit the level we talked about down here at the 61.8. We mentioned yesterday, kind of a larger level, but again, we got a base off of it and an explosion. And again, we knew that the 61.8 level would be a level where people are looking at this one and being like, maybe that's a good one, right? And it was, right? It came down. It literally kind of came right to where the 61.8 is, if you can see where the crosshair is. So we knew that that was a potential reversal. So all good with this. We can pull this down, and actually we can kind of shrink this zone a little bit, right? But right now we've actually rallied off of that zone, and we're up about 60 pips, 50 pips from where kind of the bottom was. Now, this one, I'd be a little bit cautious with the zone up here. There is a zone up there, but we have pushed it and we've gone pretty deep into it. It doesn't kind of reflect any level. Actually, let me bring this down. It will. It should. Yeah. Sorry, I was looking at this one. It doesn't really reflect any level. It is a very, very strong push. So again, we can kind of look to that one. This is another one of those ones. I think you can actually get into this one pre-market. Right now, we're kind of seeing the same thing. We're seeing the euro kind of rally up against the dollar, showing dollar weakness. Seeing all this dollar weakness before they raise the interest rate is also kind of leading me to believe that, hey, listen, this is looking more and more like a dollar strength-based news release, just because we're seeing weakness literally across the board. Pretty much everything is just showing you dollar weakness right now. So how much does it need to move? 30 pips so that we can absolutely get there within 30 pips. I think that this is a little bit riskier of a trade, right? A little bit riskier. The 50, I think, is, in full transparency, I like parity the most, but that would require an 85 pip move before the news. I don't know if we can get 85 pips in before the news, right? Maybe after, but I don't know if we can get 85 pips in before the move. I think that may be just a bit much, right? I think the closest proximity zone we have is at 99.43. And again, that's when we could take a roll off of it. But right now, we are in the racetrack from yesterday. It is that parabolic retracement going on. And again, typically, if you are long this one, I would be looking to get my profit out right here. Use it at the top of the body of the big candle. Was it 10 o'clock candle from yesterday? Look to get your profit out there because you will have selling coming in early. Now, the question is, do you take a short off of this one ahead of time? What if it hits it at like 12 o'clock? Do you take it? That's a little bit early, and I think actually that's probably not a horrible trade. This is one of those ones, though, if we do take a bounce off this 99.43, kind of taking this trade again, if you get up to 1 to 2 before the news release comes out, take yourself out and profit early. I know typically we talk about wanting to do at least 1 to 3s on everything, but if you're already at 1 to 2 before news, why risk that 2 for some crazy volatility at FOMC? Doesn't really make any sense. All right. Now, another way you can look at this today is say, okay, which one am I going to trade? So right now we did get it pulled down. You can see that we drove all the way down and kind of pulled back up and used that level another time. And it's kind of like, oh man, that's another hit. We were really hoping you wouldn't. Right now, again, we're holding more on the high side. Right now, you're seeing that we have more, I'd say, yen strength than anything else, but that kind of early news, I think, is going to start exhausting. We may start seeing the pound actually come in stronger. I do think that the market will start preparing. Again, right now, everybody's focused on the United States, but we are seeing a 0.75 raise in the UK as well. I do think we start to prepare for this one and kind of push to the downside. So right now, again, we are kind of more in the more near-term upper side of the curve. If we take this and kind of box this one off, we are in the, obviously, the top 30%. We did just go off a zone, and you can see, had you traded that again, a little risky because there was your zone with your confirmation. There's 1, there's 2, there's 3. We typically don't take 3s, although neither of these have been very far, Pierce's in. It would have obviously went past. I'll just push it across. You can see we obviously would have went past, and it's kind of riding my road or my line to the downside. So I still think as far as UKY goes, this is good for tomorrow morning. Again, we still want this to go down. I think that's a better trade setup. But right now, with all the pre-market moves coming in early, again, maybe we see the opposite. Still plenty of time. We got 24 hours to go on this one, or 22 hours? 22? Yeah, 22 hours. Again, using this as a kind of a proxy for which one you trade today. Right now, I would say that to me, this looks like we're going to have this one kind of starting to roll back to the downside. That would be pound strength. So if we continue to see a dollar weak trade setting up, we want to go against the strong one here, not the weak one, which would be the pound dollar, not the euro dollar. Now, euro yen. Euro yen yesterday, we talked about, again, a couple different levels on this one. Talked about it breaking through. We were sitting right here, right? Sitting right here yesterday. All we did was we pulled back up to that kind of same profit target, continued the deterioration, hit the level, which again, great that it based in there, hit it again. We're waiting for that Harry Potter trade in there. And again, don't have the entry. This green came back up a touch, but at this point, we're waiting for this one to collapse through. Again, Euro yen looks very, very similar to what the Aussie yen was. Again, I do think the yen could get some action today, particularly if, again, depending on how the dollar moves, that will move the euro dollar. This is a proxy. Could we see yen strength coming in today? We could, absolutely. Now, I will say this. I do believe that the euro yen will have a bit more volatility in it, like baked in any options, than the Aussie yen will. Because again, the euro dollar is going to be highly traded, so there's going to be kind of some spillover effect from it. That's the only thing that I would watch out for. I just think it has a little bit extra contagion. But right now, again, with it basing through this level, I do like it. I do want to kind of see it go down and then find a new base, and then we can readjust where the short is. But I still like this short coming down and tagging 144.87. And again, we knew that we're going to have a little bit. I'm cool. I like the fact that it dropped off of that twice. It hit the 61.8, was like dink, dink, and it went lower, meaning that, hey, listen, if we can get a decent pullback here, we can pull the trigger on that one. Now, pound dollar. So pound dollar, we had the parabolic move, and we talked about we're probably not going to get this full piece in, and we didn't. About 12:30, it started the reversal on us, and now it's about halfway back from the reversal. So right now, this one is also in a similar situation. A couple things I want to mark off. One is right here. That's where the big move occurred. We know how close we are. Can it move 39 pips in 4 hours? Well, it says the ATR on the 4 hour is 50 pips. So yes, we are absolutely within range of being able to get to that level. If it rallies up to here, showing us weakness before the news, then yes, it's absolutely an area where we can short from. It has been there before, so just understand that, but it was a very, very strong push yesterday. On the flip side, if we start to push down, the question is, do we take this level here? It's kind of a hard one, and here's why. So it was a small level. It was confirmed. There was a strong push off of it. And again, we did get the roll yesterday. It did push it very, very deep into this level. So as far as a high quality level looking for a reversal for something like an FOMC, I actually don't like it that much. For this one, if we do rally down, I'm going to have a very hard time of being like, that's it, go long. It's just the way that the level's been kind of tested and pushed all the way down. Yeah, there's some buyers here, but are they the best buyers? Like, is this the highest quality? Not really. Unfortunately, it's not. And I think that's kind of where the problem for me on this one is going to be. So for me, I'm kind of hoping we see nothing but dollar weakness ahead of this as everybody's trying to get short and they're getting stopped out on the way. Really looking for this to come up and again, potentially be up here at 115.48 or actually 115. There we go. Or actually, you know what? Let's just make it. It's so close. Let's just make it easy. Right? 115.5. Right? So that's kind of what we're looking for. Right now, it does look like it wants to roll. I just don't want to take it long off this level. All right. Pound yen. All right. So pound yen. We are continuing to see the pound weakness come into this one. And we mentioned we're either coming up to 171.81 or we're coming down to 167.82. I think at this point, with us kind of grinding through all these levels, we ground through the 23. We ground through the 50. We've now pushed through effectively through the 61.8. The 78.6 is the next one. And we know we have a level there. This is, again, I wouldn't worry about this one as much. It's already had 3 hits. Here's the next big kind of technical level people will be looking at. And again, you guys know I don't really care about the 786. But right now, it looks like it's not going to be up. To me, everything else we're calling right now is looking for some yen strength coming in. Right now, I feel like this is probably where we're looking at is maybe here. I think with the yen strength, I think we could get all the way down. And then maybe tomorrow is considered a very strong move. The way that it's preparing right now, again, with the pound, yeah, kind of hard. Right? This one's a little bit weird, right? Because you're seeing it over here and you're like, yeah, we're seeing some strength, we're seeing that, pound weakness come in right ahead of that number, right? Over here, you're kind of seeing it chopping back and forth. And, I wouldn't say that it's really one or the other, but, with it kind of pushing back, with this top in there, wanting to push it back down, that's also pound weakness. And then seeing this continue to deteriorate is, holy crap, this is pound weakness across the board going into that number. That's setting up for a potential big move to the top side. And again, now what I'm curious, and I've mentioned a few times, right? They're forecasting a 0.75, right? Would they come in and only do a 0.5? I mean, we have seen another one in the last week that was forecast for a 0.75 and only came in as a 0.5. Could the I mean, the UK's got plenty of problems. I mean, they got all kinds of problems over there right now, right? Everybody loves the new guy, but they're such a mess over there right now. I mean, they're in a recession, talking about 10.1, 10.3, whatever it is. Could they do a 0.5 so they don't go even more into recession? Could they do a 0.5 and blame the rest of it on the dollar? Absolutely. And if they do, that's a pound week trade. So kind of looks like the data is getting factored in a little bit early on this one. So right now, again, we were sitting in the middle. We're like, yeah, I kind of like the top side being a weak trade, but right now it's continuing to deteriorate down in preparation for that move. So kind of telling, right? Now dollar CAD. Yeah, so dollar CAD. Yesterday we were sitting right here. And we talked about this one. I'm like, well, we just need to move just a little bit farther, right? Right, guys? And again, we're a little bit off. Right. Now, had you used the bottom of the body, you would not have got into this trade. You would have missed. Had you used the entire red peak candle, and you may say, well, why would we do that? Doesn't that take more risk? Yes, you're right. 100%. It does take more risk. We had drawn it, and actually the way we had drawn it, we were like sitting like right there. We weren't fully on the level. Because again, the two ways you draw it is here or here. I think here was the right way to draw it. And here's why. If you've done the standard kind of like, ultra conservative, that's what you're looking at, right? The problem is if you had taken the entire body, that's where your confirmation is coming in, where it has pulled back and actually touched it. And if we go down to a 15-minute, you can see that that's where it left, right? Here's your base. It left and then came back, and that's where it confirmed that we had sellers there. So the question is, if you wanted to be overly aggressive, or if you just wanted to take just a standard kind of just, nope, that's it. We're not going to do it from here. We're going to do it every time. Yes, you probably would have missed this one by just a few pips because you would have been up here, right? You would have missed it just by a little bit. Had you taken the level where the confirmation was coming in, okay? Now, here are the pros and cons, okay? You got triggered, okay? You got triggered, and there's your trade. And 1 to 3 is out right there. So you were out pretty quickly, right? Sometimes when you're looking for the confirmation, it makes you take on more risk, and you may not be comfortable with that risk. It's easy to look back in hindsight and say, yep, that's the way you trade it. So the question is, are you looking for the confirmations in your position, in your levels, or you're not? Because if you're not looking for those confirmations, then you're trading it here, and you can see how much you missed it by. It was small. I mean, from where the peak of it was, 2.8 pips, right? You missed it by 2.8 pips. So sometimes, the market gets you either way. Now, what's interesting about this one is, whoops, let's go to here. If you run it right now, you can see that it's really having some issues with that 50. It's chopped through. There's really nothing in here. So where price is right now, it's kind of like, can we make it all the way back down? Sure, we can, but you're talking about 100 pips back down to a decent level. Profit taking would occur over here, which is 70 pips down. Can we move 70 pips between now and then? We could, right? We could. Is it likely? That's a lot of movement very, very quickly ahead of news. Now, other side of this one, can we go up? Sure, we could go up too. That is also 65 pips. So because of the parabolic move yesterday, which again, 100% justified, we had that 50% kind of retracing back down again. It puts the dollar CAD in a very weird position, right? Kind of sitting right in the middle, right at the 50% retracement level. It's like, what do we do with this? Right now, you can't really get a direction out of it. I mean, there was obviously a case here. You can see the testing here. There was a trade setup in there early on, right? That was the 9 o'clock kind of spike up and down. Right now, that's the closest proximity level that we actually have. Would I say, hey, listen, there's a buying area right here. Here you go, guys, take it. I mean, if there was, this went lower, and then it tested off of it. But we've been here 4 times. Yeah, there's a wick behind the wall, so there was something there originally, right? It's this level. There was the original level. But at this point, we've been in 1, 2, 3, and this is kind of the 4th touch. Do we want to take a 5th touch on something as big as FOMC? That's kind of a lot of risk, guys. A lot of risk. So right now for dollar CAD, it's like yesterday's retracement has really kind of messed this one up. right? Lot of strangeness on this one, so makes this one a little bit harder. Now, dollar Swiss again, the same retracement back again, did exactly what it should have done. Again, it blew up. Got to be all over it. Again, it used parity. We knew the parity was going to be a big deal. We had a level sitting right there. That's where it went off of. So again, parabolic move. It did what it was supposed to do, right? Now we're kind of approaching the opposite side. So I would say there is a level a little bit lower. And again, this would take the dollar kind of starting to get weak. It would only require about a 30 pip move, which is, that's absolutely possible in this pair. But again, you're seeing so much of this dollar weakness come in. It's kind of setting up for, hey, is there going to be a dollar strength based trade? And I would have to say, yeah, I mean, on a technical basis here, if I didn't know what the news was, right? Looking at this, seeing this parabolic retracement move, coming back down again, knowing that I have a big news release right there, I'd be like, man, if this can just go a little bit farther, I already know I got buyers down there. Again, this is the old 23. The reason I haven't deleted this because it hasn't hit the 78, but I guess I can move it here so people aren't confused. And then we'll run it here up so you can get kind of a new idea. Looking at this level, it's like, listen, there's the most recent low to high. There's obviously a buyer. And again, a failure to go lower, a little bit over there, not too worried about it. Drawing that level, it's now backstopped by the 61.8. Knowing that I have a news release coming in right here. I mean, I do know what the news release is, obviously. But not knowing what the news release is with something in such close proximity, it says the 4 hours, 34 pips. And this one is 27 pips away. I think you got to be looking at that as a long opportunity in the dollar Swiss. So we'll see. Right now, again, it's not set up. It's not quite there. I'd like to see the continued deterioration of the dollar. Again, not like the Swiss is in a great position, but if that continues to drop, I think there could be a potential trend in that one. Dollar yen. So yeah, dollar yen. It came up. It based. We were looking for a little bit. This is one of those ones. It's such a pain. It's missed it by 19 total, but you're going to say, listen, there's a base there, and that's exactly what it rolled off of. It's in such close proximity, though. It's like, just go up there and grab that one on the top side. That's the one we had drawn. It turned ahead of time. Literally hit 1 o'clock, and it's like, nah, we ran out of steam. And it retraced all the way back down again, which is great. Right now on this one as well, again, using that same violated level, we hit it again. We started the base in there. We pulled back. We're basing it again. It is set up for a Harry Potter-based trade. Yeah, so right now, again, we are seeing dollar weakness pretty much since late last night. Europeans stepped into the market right here, and they continue to show that. Again, another one of those trades where it's like, listen, there's all this dollar weakness going into it ahead of time. Is the market really just jacking this one down to raise it up later? I mean, obviously, they're not. The United States is with everything. There's absolutely zero chance. I mean, I'm going to say it. There's absolutely zero chance of a point set, a 0.25 coming in. I'm sorry, not a 0.25, a 0.50. It'll absolutely be the 0.75. It's everybody's hinged on what's going to happen next. And again, I've been saying it. The reality is, I don't think anything is going to change whatsoever. I guess the question is the tone, right? The question is the tone. I'm not exactly sure why the market has been so big on the whole, well, it may not happen. I did today, Jeff. I started 30 minutes earlier today because I got notified last night that I have a stakeholders meeting for commissioners. So I'm the president of the commissioners board, and they're like, hey, don't forget, we got a thing tomorrow at 10. I'm like, oh, you're kidding me, right? So yeah. Gotta love when you do a volunteer opportunity and they tell you that you have to attend a mandatory meeting in the middle of the day. I'm like, excuse me, what? Really? Today? Do you know what today is? So yeah, I started 30 minutes early, but if you want to catch the beginning of the stream, as soon as we hit end, it automatically is, it's automatically sitting there. So you'll be able to kind of go back and watch it. So yeah, I had to start early today. Yeah, I had to jump out like minutes before 10 o'clock so I can jump on this thing. Yeah, unfortunately, nobody else could do it either. So I was the only one. I was like, yeah, that's why you say volunteered. Yeah, voluntold. Exactly. You know what? I'm going to tell them that. I'm going to use that joke today, Jeff. I'm like, hey, I'm glad that I am on this voluntold, stream. Yeah. Yeah. Stakeholders meeting. I'm like, come on, really? Like, this is a volunteer position. Can we do it like after hours? Like, why do we do it in the middle of the day? Like, people work, not me, but people work, So anyway, dollar yen. Right now, I'm going to say it. Dollar yen looks like it's going to be down. Dollar yen will be the most difficult pair today because, again, you are juggling the dollar and then the stock market. Both of them, I mean, this is one of those things that, yes, dollar yen is an absolutely great pair to trade. When there's things that are like overall, like economic releases and non-farm and those things, they typically don't move the stock market. Today's reaction is absolutely going to move the stock market. It is that big of a, FOMC interest rate rises is that big of a deal. A 0.75 raise is huge. I mean, we haven't seen rates at 4% for I don't even know how long. Like, it's been a long, long time. Mortgage interest rates over 7. I mean, these are things we don't see. It's going to affect the stock market. So, unfortunately, the influence from the yen is going to be big. You would automatically say, well, they're raising it. This is definitely a buy. Kind of. I would say it's not definitely because of the contagion of the yen. And I think contagion is the best way. On a lot of these other pairs, we're seeing yen strength through the move right now. Kind of one of those things, right? I mean, this is going to become the dollar yen right now for big money, big business. The dollar yen is literally under everybody's watch right now, right? Because you may say, why? Well, the dollar yen is about to become the carry trade. It's that big of a deal, especially going into a global recession that brings more strength to the dollar. Yeah. This is all eyes, all big money is literally sitting on the yen. This is like super smart long-term investment people, dollar yen, they're all over it right now. Why? Because you borrow the yen for nothing and then you put it in dollars and you do nothing with it. You just leave it there, right? Right? You're borrowing it here, depositing it here, and you're automatically making 4%. That's what that means. Just so everybody understands. You're making 4% on your money by doing nothing, just leaving in cash. Just leaving in cash, right? So that's what's happening. So if anything, this one does look like it wants to roll back down again. I don't think this story is over, but I do think it has some more room to run. I was really hoping we kind of retrace back down again. I think this is going to be the most challenging of all of them to play. I think there are better opportunity out there. I don't think this is the best one. Bitcoin down. Whoops. I don't need that. Wants me to log back in again, but I'm going to save you guys the login. Bitcoin. Actually, you know what? Need it. Not giving me the thing yet. I don't know. If it pops up every time, then I'll have to switch over. Anyway, Bitcoin is currently holding okay. It is red. I do think that this one continues to drive lower today. Question is what it does at 20,000. It's 440 something points. I think we do see a spike in the cryptos today. They are raising the rates. It's not like they're not going to do it. And even going forward, it's kind of a more of a reason to go back in. I think this one comes back down. Question is, can it make it through here, the 15,000 mark or 1,500 mark? I think that 1,500 mark in Ethereum is going to be a big deal. Right. Let's just stack this here. Right there. I do think that'll be a big deal. And again, we had buying there. So I think that'll be a big question. Doji, yeah, we talked yesterday about, my God, look at this monstrous move up. And now it's down 10% today. Right. So it's not back down in the 6s. We're still playing with the 13s. But I do think that after today's release, I think that this one will continue to move and kind of deteriorate back to the downside as well. TLT. Right now, you are seeing TLT on the top side. You're seeing it up a little bit, 0.05. As you can see, it kind of peaked yesterday up in an area where you could say, hey, listen, there are some sellers here. I mean, there's a gap right above. You could say, hey, listen, there's a gap there. There's a confirmation. Oh, look at that pullback. 97.50, right? I think TLT is going to have a hard time today because, again, as you guys know, interest rate rise, it has an inverse relationship with bonds. Obviously, TLT is the 20-year Treasury bond. Yeah, I mean, I don't know. This is one of those ones that's kind of like, oh God, it's an absolute. They're raising. It should go down. The question is, will they say and give any reprieve if they're going to do it again next time? I still think that they are. I still think this is a short trade. Again, where we're located, wouldn't be surprised. I don't think we can get down to 90, but I wouldn't be surprised if we get down to this 95-ish range, 93, 94 range later on today. So I think there's something in that one. Let's go to commodities. So oil. Looks like late last night we came back up and tested that same level. Actually, that should be there. That's where the peak of the wick is. You can see the top of the zone is there. It pulled back down again. We talked about yesterday. We were sitting right in here. We were really kind of talking about, the price coming through and kind of, we're looking for some type of stabilization around 87.25. Yesterday at 11:30, I said, listen, I want to see it come down. It didn't quite make it. It made it to 87.53, so I missed about 25 cents. It came back up and grabbed it, and the short is there. I think oil is going to be interesting today just for the fact that, again, Oil, it got a little bit of a reprieve this morning, and again, this is a great number, right? This 239. More people are hiring, more people are driving, showing demand there. We know that we're kind of an all-time high for the demand on oil. Oil thus far doesn't care that the president's like, that's it, I'm going to penalize you guys for making money, which is the dumbest thing ever. Like, yeah, you want to create innovation, but you're going to charge them, and yeah, okay. Yeah, a lot of people don't realize, like, oil companies don't just make money on oil anymore. They have diversified, right? And actually, a lot of their profits and a lot of their diversification into alternative energies and research in alternative therapies, not therapies, energies, actually came about from the profits they made in 2008 during that crash. But the last time when gas was really, really high and they were making, like Exxon was making the most profit in the world, a lot of their investments into alternative energies, because they knew where the future was, came from the profits during that time frame. So it wasn't like anybody but additional yachts, right? They actually did use that money, and again, didn't do it in a bad way, I don't think. But anyway, I would say right now for me today, I think oil is a little bit more of a short. I think the 0.75, if the stock market completely just goes awire and just gets crushed, if there is a crushing of the stock market, I feel like oil is going to get ahead of that one and be like, well, I feel like it'll be a little bit more negative today. Oil being a commodity, I would say, again, with the market closing early, kind of before, right around the FOMC time, be cautious with it. I don't think it's the best setup today. I think this is one that's easy to stay out of for the day if you can trade other things. Natural gas. Remember, we talked yesterday. Actually, yesterday we were sitting here, and actually right here, and we said that 560 was where we wanted to buy, and we said that, it's choppy. It's choppy. I missed it by a little bit. It came down to 561.5, so I missed it by a penny and a half. The bottom yesterday. It was this little chop over here got me. I was like, we're gonna do it off this confirmation, not that one. Yeah, I missed it by a penny. Yeah. This is me giving the finger to natural gas. But yeah, we missed it by a little bit. But again, monstrous move yesterday. If you remember, what I did was this. I said, hey, listen, if you're ever confused about how, if something seems out of the ordinary, again, we had that. I remember I drew the boxes, little tiny bracket. It's like, oh God, yes, we were so far out of the range. We were looking for an area to reverse. And again, that was the place to do it. We missed it by a little bit. You can see there was another little pinch kind of coming in here, and you're like, oh yeah, what's going to happen with this pinch? You can see now we are so far in the other direction. Again, I would say, hey, listen, we've now pushed back up kind of the top side of this one. My opinion is flipped. Yesterday, we were down 7%. I said, hey, look for a long opportunity. Yeah, I missed it by a penny and a half. Now it's driven all the way back up again. I would say kind of the same thinking. Oil's already down. They're about to crush the economy a little bit. People are kind of, yeah. I would say look for this one to probably roll back in somewhere in the median range. I think down into like the $6 to $5.90 range is probably where it belongs right now. Russia's talking about nuclear weapons, and we're only up 6%. So, no big deal. It's all good. It's all good. But again, crude oil, natural gas, a little bit, I don't want to say riskier, but there's better opportunities with the releases that are coming out that we want to take advantage of those. All right. Gold. All right. So gold. Excuse me. Gold actually yesterday did take that turn. And we mentioned we had kind of two areas. We were kind of looking for gold to go down. And the reason why is we were looking for gold to go down is because we expected, kind of that dollar week. What we were looking at yesterday was kind of more of a dollar weakness based trade. Now we're kind of seeing almost the opposite of it on a lot of things, right? Now we're kind of pushed up. Now, I did mention that, again, with that position not coming in the same way, gold overall, I think with the two bits of data today, I think gold is absolutely short from where we're at right now. And again, we were kind of hoping that this was down and they were going to make a really, really weak statement, but a lot of that depended on what the news was today. This news right here, that's not weak news. That's not weak news. So with that said, with us driving up there, I think 0.75 is in. I'd like to see where they put the top in. We're kind of sitting there right now. And again, that's a decent top on that one. I would say if you can if you know how to play this with options, futures, I think you're probably still safe with it. But again, futures, there will be a bit more whipsaw. If you know how to play gold with options, whether it be traditional or something like Nadex, if you can get something pretty cheap here, I think gold is a pretty safe short. The reason why I say pretty safe is because, again, we already know that, their number one goal is crushing inflation, right? We know that, again, the hedge for inflation is Gold. If this had driven back down and a lot of the data was kind of front run and we were seeing kind of a weak dollar move, then yes, this would have been a great long. But with it driving higher right now, it's driving up into levels. It's kind of being pre-prepared for a short-based trade. And again, could that be the carry trade that does it? There's a million reasons why. But right now, I can say on a purely technical basis, with us driving higher, this is more set up for kind of a short position at this point. Okay. Silver. Similar. We were really hoping to go up or down one of the two levels. This one really just kind of flatlined on us yesterday. And I was really hoping to get some more movement. It shows you that the silver trader is not exactly sure what's happening. Remember, for big money, gold is a hedge for inflation, and that's where they will deposit it. Nobody's celebrating silver. Besides Neuro, no one is hoarding silver under their bed, right? Right. So again, FYI, if the zombies do raise and you guys need to get silver bullets, just go to Neuro's house. He's got silver under his bed. Gold bullets don't do much, right? You can coat your teeth in gold, get the grill, scare the zombies. But if you need the silver bullets, yeah, if you need the silver bullets, we go to Neuro's house. We melt those suckers, and again, Walking Dead all over again, right? Or werewolves or whatever. Is it werewolves? I think werewolves is a silver bullet, right? Not vampire. Or is it vampires? Vampires is a stake to the heart. And do they do silver too? I feel like vampires made. I don't remember. I think vampires do silver too. Could be. Maybe a haunted doll. You have the earnest voodoo doll. Yeah, the earnest voodoo doll. Both are affected. There we go, Sean. Thank you. Werewolves haven't tried silver versus vampire yet. There you go. So look, they're both good with silver bullets. So again, the apocalypse comes, vampires, all that kind of stuff. We go to Neuro's house. But I'd like to see silver kind of go up a little bit higher. I don't love the zone. I think it's too big up top, but I think the $20 mark is a magical number. If it goes just a little bit higher, again, we do turn and look for this to kind of roll back to the downside. I do like it more for a short. I think the way that gold and silver are both driving higher, I think you can get into these. I understand both of them, though. There will probably be a decent amount of premium and any type of options used for it. So I just picked up some more bottles of wine. Help yourself. I know, right? I'm telling you, grow garlic in the backyard, have the grapes for the wine, the silver and gold under the bed, right? I mean, at this point, if you watch Stranger Things, Neuro, look, Eddie Munson got up there and was playing some Metallica, right? So you're good to go, man, right? Get on the top of the trailer, play Metallica, use those silver bullets, we're good to go, right? Look at that. You didn't even know. You should be getting royalties for that stuff, Neuro. I'm telling you, call them right now. Be like, pay me, right? All right, so you can see Twitter. Twitter's like kind of sitting there in a level where we're like, oh, be careful. Apple already taking a dive. Tesla kind of diving, but again, it's not anything out of the ordinary right now. Ooh, indices. Ooh, dollar. Look at this. The dollar's starting to get pushed up again. God, just pick a direction. Yes. Not surprised with the ES. We kind of talked about it yesterday. There's some opportunities in here. You had to adjust this one. Kind of the near term is more there, right? And I guess you probably got wicked out a little bit on that one. Yeah, the market is like, yep, doom is coming. Doom is coming. As far as opening print goes today, I would say the opening print on this one would be, let's drop it down to 15 real quick. Right there. Yeah, it's kind of pulling back. I would say that for me on this one, opening print wise, again, it wouldn't qualify. And again, kind of a weird day. Opening print was strange today because this non-farm that was great, and then we had federal funds coming in. So we were already calling for a short and push back down again on this one. I would say the nice little pullback here, the 845 to 9 pullback was kind of like your idea of, hey, listen, if we close below that, sell it. And that's what we're seeing right now. So I think the market's going to be overly negative today. I think this one does go much, much lower. Where could this one potentially stop? Probably down in here. Probably here is where we're looking, but I think it probably has the ability to go lower than that. If you're short, 37.96. And again, what I would expect today is the same kind of V shape, right? We've had the V going on. And the reason why we get the V is because they jack the interest rates, the markets tank, and then Powell's like, yeah, it's going okay, and things are good, and, we're going to avoid a recession, and then Powell us all the good stuff. I'm kind of expecting to see that today. I don't think Powell's going to just be a complete jerk and say, just, again, we're within 2 weeks of the election. Powell's phone is blowing up today, being like, don't screw us, buddy. Don't screw us. Don't screw us. You're going to cost us the entire Congress. You're going to give it away. So I'm sure Powell's phone is blowing up today. So I wouldn't be surprised if, again, the 0.75 comes in and then he magically tells us how soft it's going to be. And it's, don't worry, we'll start to look when we get under control. We're going to, keep our finger on the pulse. We are committed to success as we've always have been. And the decisions we make are always right if people would just trust us. And then there's going to be that dude in the back wearing like a red shirt that says like, transitory, right? So, yeah, I would say short is not bad. Be very, very cautious. I think at 2:30 today, when he starts to speak, don't be surprised if the market pops up. Again, I think, I would say it's almost a bit more gambling, right, at that point. I don't think that he's going to say pause. I'm pretty sure at this point, all the signs say go, but just use caution with it. So again, we already talked about being short from this level. NQ, you can see that, we talked about it. It tagged our profit target yesterday. We said, hey, listen, we're not taking risk off this. You can see that stabilized itself and it's continuing to push lower. I think NQ has the ability to get down to 111.46 today. NQ is actually doing better than what I thought. ES and YM are both down 0.46. I think down 0.22 is actually not horrible. I think it could be much, much worse. NQ is the one that's been beat up a lot lately, so I think it could be worse. But I would say right now, as far as bounces go, if this does take a big kind of run down, excuse me, profit target there, I would say look for this to pull probably down to this 11. I think we're so close. Oh, can we tag that one? Ooh, can we hit 11,000 today? If Powell doesn't candy coat the heck out of this thing, I think we tag 11,000 today. Too close of a proximity. Last time it spiked through, got a little bit of here, but again, that pushed it pretty deep in there. So 11,000 could be on there for that. Oof. So we talked about coming down. We did have a retracement. We're looking for a base, and we're kind of hoping to be down there. We still actually may be down there. We're not that far off. Yeah, 102. We were talking about this one retracing yesterday, all the way back down to 31. Well, I guess 32,000s right there. We still have time to come down and base. These are 15-minute candles. The news release doesn't come out until there. So we still got some time. We'll see if 1030 can help stabilize this. But right now, I think YM is also a short. Again, unless Al can really candy coat the heck out of this one. Yeah, we're pushing through the buyers right now. Yeah, I don't know. I think look for the initial response and then look for Powell to save us at 230. Right. And Russell, we talked about Russell would obviously be the worst of all of them. It's going to get the hardest hit. We talked yesterday about coming down, watching this level, taking profit at 1840. You can see that today's data has driven all the way down, and we are pulling back right now, which signifies profit taking. And we're kind of coming back. Oof. We're down 1.1% right now. There's the first bit of news this morning. There's this morning's news, which is bullish. I'm sorry, bullish for the dollar, bearish for this. Oof. Wow, did we tag 1800 today? We may break 1800. So looks like right now we're calling downside targets. It looks like 1800 could get tagged in the Russell. YM, we could go down and tag 32,000. NQ is potentially tagging 11,000. And ES, where are we at? 3,800? 3,800 would be kind of where the next targets are. So, yeah, I think they're all pretty even. Like I said, I think that they, at this point, if you're not short them, they were it was better to get short this morning for the news release and then anticipation for the rest of the day. At this point, there's going to be so much premium jacked into the end of these things. You need to be pretty cautious with it. So just watch out for those. Let's see what the dollar's doing now. Let's see if it's stabilized. Yeah, it's kind of coming up. The dollar is really trying to get forced down again, even on a 15-minute. It's up there with sellers right now. It's trying to force it. So, yeah, a little bit rough. All right, let's go ahead and do it. I got 3 minutes to jump onto that other call. Let's go ahead and we're going to close this one down a little bit early. Who are we missing in here? Ernest, did you jump in yet? Ernest, I'm going to give you 30 seconds to get into this one. You should be in by now. Anybody trying to sneak in at the end and get some tickets is going to miss it today, unfortunately. Where the heck is my calendar? I'm going to give him 30 seconds because otherwise, I'll hear about it. But like, wait a second. This one, give me this calendar. There we go. Man, a Zoom call. I've been on a Zoom call for a while. All right. I guess Ernest is not here yet. All right. Closing it down. Winner of today's drawing is Sean. I'm going to tell him, hey, you don't got to worry about Neuro. Sean is over there grabbing, stealing, sneaking up in the rear here. All right, guys. So that's it for today. Like I said, this will be a big deal. The biggest thing is going to be the 2:30 release, the 2:30 press conference. Remember, part of it is prepared, part of it we have no idea what the heck they're going to say. That's going to be the main function of kind of what today's news release is. I expect an initial drop and then potentially a pop. See where it drops us down to. If it drops into a buying area, that's where we're going to want to get in. And again, all of them are, again, these are some big psychological levels. Again, 3,800 is not bad, but something like this at 11,000, that's a big deal, right? 11,000 is big. 32,000 is going to be big. And the Russell, 1,800, going to be a big number. And then particularly with gold is something similar. You can see gold is already starting to show that kind of top in there. Gold, gold, I think 1620 probably. 1630, 1620. We'll see what it looks like. But gold, same thing. Look to see, again, here's what you need for gold. We need to see a big move, and then if they have any soft, gold will reverse. I think gold is absolutely reversal today. Silver, again, not necessarily the best. And then obviously the euro pound figures, you got what's going on over there. So, all right. With that said, I got to roll, guys. Sorry that I had to go in a little bit early today, but I just didn't want to miss it today. I wanted to get you guys some of the levels and some of the targets out there for it. Tomorrow we'll be back at our regular time, starting at 9:30. And we'll go 9:30 to 10:30 tomorrow morning. So good luck today with FOMC. Again, look at those positions ahead of time. If you are in profit before the release, it doesn't hurt to take the profit off and see where price moves and then play the retracement. Again, you don't want to give up. You don't want to risk two to make that last final one. It's just not worth it. All right. So with that said, I'm out of here. Thank you guys so much. And again, I'll catch you guys tomorrow morning. Take care.